we're going to put the spotlight on a very interesting company, Tilt Holdings, that has been public for a couple of years, but listed or graduated to NEO, I should probably say, a couple of months ago. And I've got the pleasure to have here with me Gary Santo, their CEO. Gary, welcome.
Thank you for having me, Jos. It's been too long since we've connected in person, but I'll take this as the next best thing.
Absolutely, and I'm sure we'll make up for that in the nearby future. So, Gary, we're here to talk about Tilt Holdings. I know that the audience will come with a couple of questions. I've got no doubts about that. And for those who have not yet put questions forward, feel free to do it. I'll make sure that we integrate them into the conversation. But Gary, let's start with first things first. Tilt Holdings. For those in the audience who don't know your company that well, could you give us a bit of a high level view of what the organization is doing, what the organization's value proposition is?
Sure. I mean, I think there are a number of folks who are familiar with Tilt in one iteration or another, because when it went public in late 2018, it had a typical broad mandate, I think, like most of the cannabis operators who went public that time had. And, over the years, it gets honed, it gets refined, as you might imagine, and it gets winnowed down. And really, I think a few of the things that separate us is we're one of the few, if not the only, end-to-end provider on a B2B basis of both cannabis and non-plant touching products and supplies, really, and even supply chain management. So we're there to support MSOs, we're there to support brands, not to compete with them. And I think the other interesting piece is we're probably one of the few, again, if not the only cannabis company MSO that exited 2019 really funding ourselves out of cash flow from operations only. So it's been a frugal build. It's been a slow build. There's been some, I would say, pivots to the strategy, which we could talk about in more detail over the years. But really, we came into 2021 with a sharp focus as to where we think that future lies, where we think the market's going, and really the B2B play as the way to get there.
Yeah, you immediately make me think about a couple of questions, and I see one that pops up over here also. You said that you have been self-funding, you have been building out and growing on the back of your own cash flow, and of course, without sharing any information that is not public, so we have to go back maybe a little bit in the past. One of the questions is, where are you today from a cash position perspective?
So I think this was a year that we were hoping to exit the year probably with somewhere between $15 or $20 million of cash on the balance sheet. I think we've had a little bit of a pivot there for the sole fact that with the supply chain disruption we've seen out there, it's been a great opportunity for us to deploy some of that cash and to put our working capital to work. So we're carrying slightly higher inventory levels. We certainly exited last quarter with a substantial amount of inventory on the balance sheet, both plant touching and non-plant touching. And it's really served us well. This is the time of year, especially on our hardware division side, where so much comes in from China, where we start to see stockouts occurring from some of our competitors. And we love being able to jump in and supply that kind of additional horsepower. And we've already had a few of those calls earlier than expected. Similarly, I think on the plant touching side, it's been more to help support our brands that we're getting ready to launch. We've signed 4 brands and launched 2. You need to make sure you have the raw materials to do that. So, I don't think we'll be exiting with quite the amount that we were originally hoping to. Instead, you'll see more higher inventory, but that's a tactical decision. And it's great to be in a position to make those kind of strategic decisions and not have to live hand to mouth.
Yeah, it's an opportunity. And so what you're saying is that the global supply chain issues are in fact an opportunity for you, and you're taking advantage of it. One other point that you mentioned in your first intervention about the strategy has been evolving over the year, and now you have a very clear view on who you want to be, what you want to be. Lots of focus on the B2B component. Could you shed some light, because I think it's interesting for the audience and for investors to understand how it has evolved, because that clearly translates you acknowledging the market, you acknowledging the environment, and being able to adapt. So it would be interesting to get a bit of an understanding of how it evolved over time.
Sure. I mean, as I mentioned, when Tilt went public in 2018, it had a lot of the same aspirations as most of the cannabis operators. It was a very broad, wide mandate, getting in multiple states and providing a number of different services. So many shots on net, something will yield a result. It's also very capital consumptive when you have those types of things. And what we saw in the broader market in mid 2019 were investors getting fatigued over top line revenue growth with no profitability to really show for it and not a clear pathway. So our board took some action and decided it was an opportunity there to pivot and demanded a different business strategy, one that could act a little bit more appropriately given the amount of revenue coming in, and figure out a pathway to funding yourself out of cash flow from operations. So there were some management changes along the way. I think there were some pivots in terms of where we saw the company going. We had plant touching and non-plant touching assets, and a number of folks have asked that question: how do they coexist? At the end of the day, when you put them together the right way and you realize that almost 30% of our revenue now is coming from customers who are customers of both our plant touching and non-plant touching, it means you just have to bring them together the right way, sell them the hardware, fill the hardware for them, assemble it, package it, and then distribute it for them. So it's a definite differentiated path. It's not as retail focused. And I think the biggest piece of that is just our view on the cannabis market in general. We've been pretty vocal saying that we think CPG is where this space goes long term. We're seeing bits and pieces of it. I think the wholesale market, as people have defined it to this point, has been selling bulk. We've done that. We're moving away from that, to be honest. Packaged goods is more the way to go. Branded packaged goods is a better way to go. And I think that sustains whether it's in the current environment or whether you're talking fully legalized down the road where suddenly you can do interstate. So I think we put ourselves in a great position, even though the broader capital markets have been somewhat challenging for cannabis stocks.
Yep. Is it the right thing to say that you specialize in B2B, like it is a form of wholesaling also, but with a finished type of product, and you have a strategy of letting others who have the footprint, who have the brand, who have the retail proximity, or who have proximity in other areas for non-recreational, do the entire distribution. Is that the way to say it? And I always define that a bit as a smart sourcing model. You do what you're really good at, and then you find parties to work with or partners to work with to do where they are strong. Is that a fair way to translate the strategy?
I think so. I think we like to own that middle part of the supply chain. So we'll do that specialized cultivation because that high-end boutique grow is probably one that sustains even in a legalized world where a lot of people see that commoditizing. We do the supply chain management. It's something we learned to do with our inhalation division, shipping product from China, and we bring that into our packaging and how we manage through all of that. And really our focus is, when you think about MSOs, they all talk about 30% or so of their shelf space being dedicated to third-party products. We want to be sort of that curated portfolio of products. And we're not going to own the brands. I think that sometimes changes a brand when a different company takes ownership, the identity starts to fade, the fidelity goes away a bit. And frankly, we don't know which brands are going to be the ones that win. So I think for us, partnering with them and doing more than just pure contract manufacturing and wholesaling, but really working with them to bring that brand fidelity from west to east, where the regulations make it very challenging, and then giving them full access to our capabilities. So our distribution, it puts us in a position where we're somewhat agnostic. If it's an MSO, retail outlet, if it's an independent mom and pop retail outlet, if someday you can buy online and have Amazon distribute it, we'll get the product out and we'll do it in a way that's as broadly distributed as possible.
So, and it is fair to say that you are very unique in that strategy?
I think so. I think when you look at a lot of the other MSOs out there, they're building their own brand. It could be challenging on the East Coast where you only have a limited number of retail stores, and MSOs typically don't like to buy each other's products. So I think it's important for us that we do have a few retail stores in Massachusetts because we have to. We will share our shelf space much more openly with our brand and MSO partners out there than a typical MSO might. But we don't want to compete with them. I think that's what makes it very different. So we'll bring those brands in that their customers are going to care about, and also provide, for that matter, white label products that they might want to produce on their own, but because maybe they have limited capabilities, maybe they're super focused on high-end premium flower, we can step in and help round out their product offerings for them.
So what makes you, or what is different about you that makes you feel comfortable that this unique strategy is really something that you will be able to very successfully execute upon? There must be a number of core assets and capabilities in-house that beyond the vision, push you in that direction?
Sure. I mean, we have a phenomenal facility in Massachusetts. It's about 100,000 square foot, state of the art, full kitchen, full extraction. If it could be done with a plant, we can probably do it there. And I think that was sort of the inspiration. And the fact that while we were working through our licensing issues in Massachusetts, we only really had one retail store functioning as a medical store. So we were building out this wholesale capability. Similarly, in Pennsylvania, we have a 60,000 square foot operation, and we sell into about 90% of the dispensaries out there. We have no retail footprint. So, we've been learning to do this since day one. And I think our inhalation business sort of just supplements it that much further, in that we have over 700 partnerships on the inhalation front with brands and MSOs and LPs. And we really provide our products on that white label or customized basis. So we're the person behind the person. Sure, you can go and buy some of our own branded products, and that's great, but we're there to really support the other brands. So we've been doing it for a while. I think we're not confused as to what we're good at and where we want to go. And we think it's a scalable model because partnerships, I think, work out better for everyone. It keeps the capital outlay manageable for all parties involved, and it keeps everybody engaged. Whenever you have one party laying out too much capital and the other party just getting too much gain, those things never pan out. So I think, we've been really pleased, frankly, by the receptivity we got when we started our brand outreach. And last week at MJ Biz, we probably had about a dozen brand meetings, people who either already have partners and really like our story and want to learn more, or are really looking to come east. So I think it's been a pleasant surprise. We rolled out the strategy in January, and we've already signed 4 brands and activated 2. So I'd say we're pretty proud of what the team's pulled together.
That's impressive indeed. And talking about strategy, so I think you're very clear in your mind about what you're doing now and what you're executing upon. But let's look a little bit further in the future. You talked about the future of the business is going to be CBD, but let's look at that in a bit of a more holistic way. Where do you see yourself in 3 years, and what are the key elements, the key success factors? Because I'm sure that is going to be a positive vision that will drive you in that direction.
Yeah, I mean, I think for us, like I said, we're trying to build this company to thrive in the current environment as well as a fully legalized environment, because I don't know exactly how long it will take to have the full legalization we're all waiting for. There'll be bits and pieces, hopefully. Everyone talks about safe banking and starting down the path, but then you see, on the federal side that they want to take a bigger swing at things. But even when they legalize, you'll have to deal with how the states are going to then implement. So it will be years before that works its way through the pipe. So our goal was to not have a business so dependent one side or the other. And I think for us, if you look at where our assets are, we have our plant touching assets all within a few hundred miles of each other in the Northeast. I think that allows us to really centralize a lot of our operations. Even though we can't cross state borders, we can certainly have centralized, senior level operations like heads of cultivation, heads of operations and such. And if we ever do get legalization, I can get tactical with what I grow where. So in my greenhouses in Pennsylvania, I'll grow biomass. And in Massachusetts, the high end grow, that's where I'll do my boutique style grows. So it also allows us to reach probably half the US easily, again, in a fully legalized world. Absent that, while brands are trying to come from west to east, it's also access to some of the most, I think, attractive markets. So Massachusetts, Pennsylvania, Ohio, and New York, hopefully by this time next year. So, I think that's what gives us a lot of comfort that we're somewhat future-proofed, because you don't know what's going to happen on the legislation. Certainly, this year's almost over. Next year's an election year where there'll probably be a lot more campaigning about change than implementation of change. And we don't want to leave our shareholders hanging if we can avoid it.
Any plans about geographic expansion beyond the US? Because the model that you're developing, or the strategy that you're executing upon, I can imagine that there could also be quite some interest for that in other parts of the world. Thinking obviously about Western Europe as a first example.
Sure. I mean, we like the partnership model, more and more. So we partner with Cannabo on the inhalation side. They have one of our proprietary products. It's called the L9, but we've gotten medical approval in Israel. We're obtaining medical approval for the EU and the UK, and really they'll be our distribution partner on the hardware side. So I think as we look out across the rest of the world, we sell in about 15 different countries right now. I think there are some opportunities. I think for us, we like the asset light version where, they know their distribution better than we're going to know it. And for us to try to prop something up doesn't seem efficient. So I would look for us, as if we decide to expand more partnerships like that, and it's just a question of what else can we do. I mean, one device is nice. I think we have such a robust R&D department, especially on the device side, that I could see us coming up with some additional proprietary products that could find their way throughout the world.
Yeah, no, I think it's great to underline that, because your model allows you, much more easily than for any other MSOs to enter into new markets, and you are already in a number of markets outside of the US, and I don't know how many people really realize that. Gary, the next question I would like. Yeah,
That's a
sorry,
great
go
question.
ahead.
I was going to say that's a great question. I think overall it goes back to where we sort of started the conversation. I think people are still getting to know who Tilt is. It's not
Yeah.
often companies get a chance at a second act. There was a time when I think Tilt was struggling along in that 2019 stretch, like a lot of companies. But I think when you have a firm foundation and a strong foundation, it's allowed us to come through. And as time goes on, people will learn more and more about us. We'll just keep executing and doing what we can to bring awareness.
Yeah, no, I think it's a critical component, and I hope that our discussion is helping with that also. And understanding where you come from, understanding where you are, and what you're doing is critical. That will attract a lot of interest. And talking about interest, let's maybe get to that point, and it will be a good opportunity to bring in some of the questions that I
Sure.
see coming in here. When I look today at the stock, I'm an investor, and I like what you tell. I like the story here. You got a lot of interesting components, like you're funding your own investments. You have a very agile model. You have strong assets, strong capabilities. You're in a number of very interesting US markets. You are already active internationally. So story is good. So then I look at the stock price and I say, that doesn't really translate everything that I see. So should I invest, or should I wait a little bit more and wait to see for more? Or is this really the moment? Is this the opportunity? What are your thoughts around that?
I
Around the
can't
price,
provide
around the
investment
opportunity?
advice. I can't
Of
provide
course not.
investment advice. No, I mean, look, I don't think that we're performing any worse than a lot of the other companies out there. In fact, we've been doing an analysis, and we're almost in the middle of the pack. If you were to chart all of the different MSOs, US and Canada, throughout, and just take a look at their stock price performance. Now, the question is, we never got to the highest heights that some of these other folks are in. So if they're down 15 or 20 or 30%, coming down from $5, $6, $7 is one thing. Coming down when you're effectively a penny stock is another. I think it's a tough time for a company to have a second act, to reinvent itself in the middle of 2019, when really the cannabis market had its first big pullback from that green wave, and you started to see some good traction going into 2020, and then boom, the pandemic hits. We come out of that, you start to see some good traction again into the start of this year. There was the optimism with Biden stepping in, and legalization, probably a little too much optimism. And then you had some pullback when some of the custodians out there started saying they would not custody US cannabis stocks. I think Credit Suisse was one of the first ones, which triggered a big sell-off in the space. And as a result, I think there's been some reluctance at this point, trying to understand, even though companies are putting out some great quarters, ourselves included, there's just not that investor interest right now because of some of the custodial issues and some of the more technical aspects of owning a cannabis stock in the US. So, I think from that perspective, getting up to being in the pack, if you were to go back a year and a half ago, I'd say we were trailing that pack. Now we're in the middle of the pack. The goal next is to break out from that pack. And as that investor interest, I think, starts to come around, we start to tell this differentiated story. Our hope is we will begin to separate ourselves from that pack, because it is a different animal. So, I think at this point, talking with other CEOs out there, looking across the broader cannabis sector, you really can't get too wound up around the axle, looking at your stock price day to day. I think you've got to take a look at your strategy, make sure it still holds, make sure that the business is executing the way you expect it to, and acknowledge that, markets come in cycles, and we'll do everything we can to be in position A, but we can't really get bound up with, trying to day trade our own stock. But I think it's still a good investment. So that's a long-winded answer to your question.
Well, I was going to add a couple of comments to it,
Sure.
Gary. I think that as you said, the cannabis industry has had a number of headwinds, and we all know, and no one knows the timings, but we all know that it's a matter of time before those things are going to be unlocked or tackled. And you can't really control it, but it's a matter of time. And it's an industry with tremendous potential, tremendous opportunity. So what that means, that is, in general, for me, it is an interesting opportunity to consider in your investment portfolio. And I'm not going to give any advice either, but I'm just going to say it's an interesting opportunity to consider. Then the second point that I would make is, within all the players in that industry, within all the companies that you can invest in, I think it's very critical to understand how they operate, how they perform, what they are doing, because there's still a very big difference in my eyes, in strategies, in capabilities, in cash positions, in success. And I think that that is what investors really need to spend some time on, and not just play on noise, but spend a little bit of time in understanding. And I think a question came in: what are you doing to help the stock price? I think the key message is, tell the story and bring awareness, because I think you have a great story, and that turns, and I'm going to say it again in a very cautious way, but that means that this is an opportunity to really consider in your investment portfolio. But everyone should do their own homework. But I will also let you react to that question. What are you doing to help the stock price? So let's just throw it straight at you.
No, look, it's a fair question, and or criticism, depending on who's asking the question and how they ask it. I think there's only so much you can do. I mean, to have me running around with all sorts of wild-eyed statements or just trying to come up with press releases designed to get a pop out of the stock, that's not long-term shareholder value. I think this is something that the industry contended with, frankly, for quite some time. You had a lot of people who knew how to raise money, but not a lot of those same people knew how to build an operating company. So they said all the right things, they got all the right attention, and then they didn't deliver the results. Yeah. We're doing it the opposite way. We're going to keep executing. We're going to be very loud about what our strategy is. We're going to continue to show growth. I know it's not sexy and exciting, but we're building this for the long term. Pop, we're not looking to try to help somebody who picked up the stock yesterday get a couple 10 points. We're trying to build this longer term, because we know we have shareholders right now who are underwater, who got in 2-3 years ago, and we need to address those folks. And you do that by building a firm foundation and by executing, and not constantly running to the next hottest thing with the hope that this press release is going to drive the stock price up one way or another. So it's a long-term vision. It doesn't mean we don't revisit it on a regular basis every year. In fact, we're in our budget and planning session now. But I could not be more proud of what we've done as a team. I mean, if you go back just 12 months ago, we didn't have our licensing figured out, and we just opened up our second store. We'll be adding adult use in both our Taunton and Brockton stores probably before the end of the year. We've signed 4 brands. We've activated a bunch. We've figured out a way to get into New York State with a great social equity partnership. So it's been a hell of a 12-month ride for us so far. And I can't just look at the stock price and say, it's a failure. I think that's something that's going to come along when the rest of the market comes along too.
No, by the way, I admire you for what you just said, not running to the next thing and then having a press release and trying to get investors excited about, running after the next hot thing in the market. That is something that we see too much. And I think it's one of the big issues that we still see in the industry: noise, inadequate information, giving a perception of success. And I think that's another big element that is important about your organization. You do the things that correspond to your strategy, you execute, and you communicate the facts. And that again is a big differentiator in my eyes. One question that I see coming back is, how about the debt? How are you looking at tackling your current debt?
Yeah, so we have about 75 million in debt. It comes in 2 tranches, the first of which is due next November. The second comes due in 2023. It's 8% debt, so honestly, it's not burning a hole in our pocket. But we also know that we don't live in a normalized capital markets environment in cannabis. So I think we're opportunistically looking at opportunities, whether it's refi the entire stack, whether it's do it piece by piece. We're also very lucky that we don't really have any encumbered real estate assets. So we've stayed away from the sale leaseback bug, but I think we're sitting on about $50 million or so worth of real estate if we wanted to activate that. So I think for us, we're being very tactical. We're taking a look at what we think our cash needs are going to be and trying to figure out the best way to approach. We don't want to be standing there, by this time next year, wondering how we're going to make that payment. And I don't think that's going to be the case. But our preference, frankly, is to do something that's non-dilutive. Kind of show the world that you can do a big boy deal, maybe even try to avoid OID and all the different optics and just say, look, here is the debt, here is the coupon, and that's what it is. And try to build, big boy capital structure. So team's actively working on it. We got a really solid finance team in there. I think we'll have some progress on that in the not too distant future. But, I think it's something that we keep an eye on. But like I said, with 8% debt, it's hard to sit there and, run around like your hair's on fire.
Yeah. No, I think wise approach. Another question that keeps coming back is New York recreational. When?
Well, I think what's exciting. Yeah, I think what's exciting is, if we had an operating facility right now with the Shinnecock on their tribal lands, we would already be adult use. Shinnecock approved adult use as well as medical use on tribal lands. So right now there is a desire to get that facility built and built quickly. As far as broader New York State, I think they've made some incredibly positive moves since the gubernatorial change. I think the new governor that stepped in has been much more cannabis friendly. They've assembled the board faster than I thought they were going to, and they filled that board out. Obviously, there's some steps that need to go in, from a process of that board coming together and then starting to put the regs together. But it seems pretty clear what their focus is and trying to expand that market. And it seems very clear that adult use and even wholesale is likely to become a part of that. I think the one piece that will be very interesting to see is how they approach social equity. I think I was at a business of cannabis conference a few weeks back in New York, and about 75% of that conference was discussing social equity and how to weave that in. And I think New York's got a real unique opportunity here to learn from some of the other states that have tried to do social equity. Some have done a better job than others. And I think that adult use and wholesale could be great tools that could allow them to help ensure that there is appropriate social equity, throughout the state. So, I mean, for us, obviously partnering with the Shinnecock, I think that speaks for itself. It's an exciting opportunity. We had their managing director, Sinead Bullock, who's the head of Little Beach Harvest, out at MJ Biz with us, brought her to a lot of the different brand meetings. So it was a great way to introduce her to the broader cannabis industry and really start to educate the folks back on the native grounds on what it's going to mean to be a true cannabis operator. So, like I said, if we could get it started tomorrow, we'd already have adult use and I'd be smiling all day long. But, I think we're still going to do what we can to move forward and try to get the state to move forward, especially on the wholesaling piece of that.
And that is, I was going to ask you a question about it, but I think you covered it. But again, you're ahead of the curve when it comes to social equity with your partnership with Shinnecock. And I think again another, as I said, differentiator and also something that talks to your values. I'm quickly looking here at some of the other questions. Someone asked a question. I found that an interesting one. Your opinion on the class action lawsuit that is being settled?
Our class action lawsuit.
Yeah.
So it predates the actual, corpus of that predates my coming on board. I think, look, companies get sued all the time. Class actions put out there for a reason. It's I think along those lines. It's something we took very seriously. I'm happy to be able to settle that right now and do what we can to move forward along those lines. But I think that's our approach to all the legal suits that we're in. These things come up. Some of them have more merit than others. Some are just nuisance lawsuits, and you have to move on from them. I think this one, was worked through appropriately and diligently, and I'm comfortable with where we really landed on settling that out.
Thank you. Again, I think it's great to be transparent and come with a clear view on that. We're almost at the end. I can't believe that these 30 minutes passed by this quickly, Gary. And I had someone making a comment. Where is it? I found it quite cute. I have to repeat it. He's so good. And I don't think it was. I don't think it was about me, by the way.
I think it's you. It's the accent.
But the last question I got to bring up also, because that one I find quite interesting also, and I'm going to give it a little bit of intonation. Why the NEO? How is that going to help your stock price?
I think it's one of those things where a number of the things that we had to do to come up onto the NEO, you could voluntarily do on the CSE, and it's no slight to the CSE. I think a lot of companies have found a lot of volume there and a lot of access. We weren't really seeing that kind of trading volume. We weren't seeing the kind of transparency, and really, the kind of things we had to do. So the multiple years of audited financials, the heightened governance, and such. They're not the kind of things you'd ever put a press release out and say, "Hey, look at us, we have good governance." By stepping up to the NEO, it was a way to sort of wave that flag and say, for those of you who might have known Tilt previously, for those of you who might question how deep is Tilt's bench and how strong are they as a company, stepping up to the NEO, I think, was an opportunity to sort of, I guess, preen a little bit and say that we've got it figured out, and that we're stepping into a more senior exchange, one that is modeled more closely to the big boards in the States. And I think for us, getting rid of some of that high velocity trading, getting a lot more transparency and having a team that really understands our stock. So when I pick up that phone and I call anyone on that NEO team, I'm getting pretty quick responses on, hey, here's what we're seeing. Here's some of the things you might want to watch out for. And more importantly, I think a lot of the relationships they've plugged us in with, whether it's market makers or otherwise, they've all been high quality. So, I think it was a good step for us in the right direction. Did I think that was going to make the stock pop and become a dollar stock? No. But again, it's a foundational step. And everything we've been doing over the last year or so since I've come on board has been about setting that foundation for when that market turns, and we continue to deliver.
Yep. And what I would maybe say, and I'm not going to do any sales job on NEO over here, but I just want to maybe for the audience who doesn't realize that, but the standards of a NEO exchange are, I would say in the Canadian environment, similar to those of a TSX. So we build a lot of other things around it. That is where I would get into sales, so I will not do it. But it's the standards of a senior exchange. And there's a big difference between standards of a senior exchange, NEO TSX, and the standards of a venture exchange. And for whom is that important? It should be important for every investor, but it's particularly important for institutional investors. They pay a lot of attention to that. It's also important for investors who want to leverage marginability. It's important to become part of benchmarks because none of those things happen with venture exchanges. And I think those are just facts. All the other reasons why I think NEO is a great exchange, I will not cover over here because it's your story.
No, I think the institutional argument is a big one because this is an industry that is custom made for institutional investors, right? It's a high growth industry, meaning you need the institutional investor that has the longer viewpoint and is willing to watch dollars get reinvested and have a 2 or 3 year time frame. They're not looking to day trade and get in and out. Unfortunately, for regulatory reasons, some of those institutions have not been able to come in, but that will change. That will happen. And being on an exchange that caters to that is exactly where we want to be.
Gary, this was a great conversation. I really want to thank you very much, not only for your time, but for your candor, your openness, transparency in answering all the various questions. And as the anonymous attendee said, for being so good. Thank you for being with us. To the audience, a big thank you for joining us. And I know, lots of questions came in that we have not been able to address. We will make sure that all of those are directed to Gary and his team so that they can follow up on you and give you an answer to those questions also. Absolutely. Gary, thank you. Thank you to everyone else and have a wonderful day.